Hi, and welcome to another episode of Financial Market Insights. Today, we're delighted to have Richard Baker of Tokenovate with us. Welcome, Richard.
Thank you, David. Good to be here.
So, Richard, you've evidently had an interesting and varied career in financial services. And like me, I guess we're both probably referred to now as industry veterans. So, tell us how you came to create Tokenovate with your co founder, Gerard.
Yeah, no, great. Thank you. Well, actually, a varied career before financial services, which I think has given me maybe a different perspective on the way I look at financial service infrastructure in particular, David. But yeah, started life as an electronics engineer, was in the merchant navy, believe it or not, as a radio officer, which is topical at the moment because I'm having this conversation with my children about the pending conservative UK objective of maybe reintroducing national service, which is scaring my 17-year-old somewhat. But nonetheless, I actually had 15 years in telecommunications industry first, working in big corporate enterprises, so building optical networks around the world. And then a period of time in content running on those networks, particularly audio and video streaming in its early incarnations in the 2000s. And then, led and built a business out of Singapore called Clear Trade Exchange, which was my first big step into financial services. And that was a commodities futures exchange. It was around the time that global regulation was changing, David. It was the introduction of the Dodd-Frank Act and MiFID II. Founded that business in 2010, sold it to Deutsche Börse Group, or a division of Deutsche Börse Group, in 2016. And fell deeply in love with financial market infrastructure during that journey. Stepped away to do a few other things, met blockchain technology in 2017, and find myself putting a few of those worlds together now to build Tokenovate.
So, blockchain, definitely an area where you can teach me some things. Tokenization, which is another part of your world, I know. So, there's a lot of buzz and noise about these things, particularly about tokenizing real world assets to make things arguably more inclusive. Is that what Tokenovate's about? Tell us about Tokenovate.
That's a part of the overall platform capability that we're building. But maybe we set the scene here firstly. I guess, firstly, Tokenovate. Tokenovate, well, we tried to be clever in the name, but it's play on tokenizing novation. And in financial services, particularly in capital markets, we focus on the world of over-the-counter derivatives. And when any counterparty in the world uses a derivative, they tend to rest on one master contracting framework, which is known as ISDA, the International Swaps and Derivatives Association. It's a master agreement that's been running since the early 1980s. And whether I'm trading in commodities or fixed income or bonds or interest rates, most counterparties tend to use the ISDA master agreement and its supporting schedules. And within all of that, David, if you and I were to enter into a trade, we'd refer to it as a bilateral trade. But the regulators kind of stepped in on that back in 2013 and asked you and I to trade ideally on a venue known as a central limit order book or an exchange or a marketplace. And with that, also that we would give up our trades to a central counterparty known as a clearinghouse, a CCP. And actually, when you and I give up our trades to a clearinghouse, that's known as novation. So we legally novate our obligations and our risk between each other over to the clearinghouse. So I existed in that world in my first business when I built an exchange. And that role of actually getting technology to deal with the economic transfer of the trade over to the clearinghouse was cumbersome enough. That was a pretty fragmented and painful process when I first looked at it. But now to get economic and legal obligations transferred between parties to clearinghouses and other participants in the market, blockchain technology has a unique role to play here. So blockchain, I'm always careful when we start to step into blockchain technology. It's not a utopian technology by any means. Really, I'm a big believer that blockchain was invented as a modern day transaction and record keeper. Firstly, it is a timestamp record keeping capability. It acts as a decentralized ledger. So it's a books and record system, but it's a books and record system that is highly distributed and uniquely synchronized so that everybody sees the same event instantaneously. So firstly, it's a transaction processing database. Second, the right blockchain has money system built into it. So if you can think through data and money, you'll tend to find there is really one particular format of blockchain technology that allows you to start to think about economic systems in a completely different way. And so, yeah, with Tokenovate, we are building on a distributed blockchain, but we also use cloud computing technology to scale that. And we'll unpick this as we go forward, but effectively, in essence, that novation I referred to, we've designed and built smart contract libraries to deal with the workflow of how counterparties enter trades, manage trades on a daily basis, and how that novation can happen elegantly through digitization. Pretty cool stuff. I love working on it, actually.
Cool. Interesting and beautifully lined up, because actually my next question to ask you was, what do you do with the token as part of a smart contract then? How does that work?
Yeah, and actually, you phrased that nicely. I think blockchain technology has probably come of age in the last couple of years. I think the first big predominant use case of blockchain technology has been the rise of cryptocurrencies or crypto in general. We've got over 21,000 crypto tokens on the planet. They run on multiple different implementations of blockchain protocols and networks. And to a certain extent, that's probably cast a shadow over the technology itself. So within a blockchain, you have the ability to, program code functions and effectively automate workflow and sequences. And one of those particular techniques is the ability to tokenize something. So what am I really talking about? I'm either tokenizing a real world asset, which is, something in the real world that still exists in the real world. And now we create a digital twin, a representation of that asset on the blockchain. And effectively, we will use coding techniques to inscribe, well, what is this asset? Who owns it? How can it be moved? So we're getting governance structures right. The other version of digital assets, the other version of using tokenization is the build of native digital assets. So I can use the blockchain itself to create a digital asset on the chain, and it only exists in that digital form on the chain. And that's certainly what we've seen a lot of the various crypto assets look like. So I always think, firstly, David, it's important to think of tokenization as not an end goal. It's just a technical technique to transform something from one state to another and represent it differently.
Great explanation. Thank you. So, Tokenovate USP is engineering a smarter financial world with a new approach to how we use this distributed blockchain. My limited research tells me that there are different types and different things available in blockchains. Do you want to kind of give us a clue about that?
It's entertaining and disappointing times when you look at blockchain. Almost has this mystical feel to it. People talk about putting things on the blockchain as if it's this ethereal network that operates around the world. But the reality is a blockchain is just a communications-based protocol. In my mind, there are really only two formats of blockchain, and trying to keep this as tangible as possible. Really, over the last 15 years that blockchain technology has been presented to the planet in this incarnation of life, then we're really talking about blockchain technology that is built on the Bitcoin protocol. And the Bitcoin protocol underpinning that is a process called the proof of work mechanism to how that particular chain runs. And the magic ingredient in the Bitcoin protocol is something called the UTXO, which is the unspent transaction output. And I'd almost encourage people to think about a UTXO in the Bitcoin protocol a little bit like a data packet in a IP network. It's the mechanism that you package information into the protocol to send it on its way in the network. The next version is the proof of stake account-based ledger system, which is the most popular is Ethereum. And so those are your two foundational layers. Those are often referred to as layer one technologies. And over the last maybe 8 years, we've seen different scaling techniques because both of those networks and protocols have fundamental characteristics that make them very, very different. The account-based ledger is a serial processing system, whereas the UTXO is a highly parallel processing system. But both have had challenges over their development journey. Bitcoin didn't cater very well originally for programming of smart contracts, whereas actually the Ethereum network did. They got that right early on. But equally, in return, the Ethereum network has suffered with significant scaling problems, where the Bitcoin network actually, in its original version, has an infinite scaling capability. And for the listeners, I'm just going to say it once, but at least what people may have missed in the journey of the Bitcoin network is that from when the white paper was first published, there were 73 different implementations of the Bitcoin white paper. 11 of them have persisted. And so people in the planet tend to know BTC, Bitcoin Core, as Bitcoin, but actually there are many other versions of Bitcoin. And so when I'm referring to Bitcoin, I'm talking about the protocol, not BTC. So I don't know if this helps, but I would encourage people to think about layer one foundation. And if I'm thinking about running complicated asset classes, the big question you have to ask is which of these networks will be here in 20, 30, 40 years when I want to settle a bond? If I tokenize a bond and enter into a long-term contract, I need to think about which technology is likely to persist, find its way in standards, and be here for the long term. So it's a big topic. I apologize for explaining too much, but for me, engineering first principles really matter when we're thinking about this next big shift in financial services.
I love asking you a question. I end up answering my own question 3 or 4 times in your explanation. I've told you before that's happened, but it truly has just happened again. I was about to ask a question and partway through you explained the answer again.
Oh, well, thank you. No, I think look, I go to the extra lengths, maybe, David, of animating. I like to try and animate and create visual pictures in my answers. So you can always tell me to shut up and shorten the answers.
I'm not likely to do that anytime soon. The question really is, how ready is this, fairly traditional financial services marketplace to embrace the new when it comes to this approach?
Yeah, that's a really big question. And I have to say, I think it's really ready. The last 2 years in particular, I think we've seen around the world a lot of experimentation on different types of blockchain, digital ledger technology. A number of banks, asset managers, clearinghouses, exchanges have all had.
You're doing it again because I was just about to talk about one end of the scale to the other on of this. So you're 100% right.
So yes, the simple answer is I think financial services is ready. Does that mean it will happen really quickly? Well, let's unpick who's in the market and what are people doing. And that will give us an indication of, of the velocity and the trajectory. But yes, certainly I think industry is ready.
And so, from your perspective, who are you talking to about this? I'm not asking for a customer list here. I'm just thinking about what's the kind of target market for this change, because there's quite a lot of still very conservative firms out there, aren't there?
Yeah, well, I think, certainly answering that, Tokenovate operates, in the traditional financial services. So we focus on capital markets sector. So that means more or less every one of our customers is a regulated participant of the market. They could be a prime broker, interdealer broker, a clearinghouse, an end commodity house that's trading derivatives, or an exchange venue, or anybody in between. We are building a next generation financial market infrastructure for all of those participants to run their derivative trades in a different way. And that different way is, redefining the cost base of that, making it a lot more efficient, removing a lot of the impediments, the friction that's in the current workflow. So yeah, we don't presently participate in, there's nothing retail in anything that Tokenovate does. It's all B2B and regulated markets. And I think if you look at the press, really, David, on a daily basis, you're seeing now announcements from BlackRock or JP Morgan, Morgan Stanley, some of the biggest asset managers in the world, most of the regulated exchanges. Every single entity has a digital assets, tokenization, blockchain strategy. And most firms have come through their early testing of some of those techniques, and they're getting ready for, what do production systems look like? So I think it's a pretty big market. The forecasts are amazing. So we're pretty excited to be working on this topic and in this industry at this particular inflection point.
Cool. So what do markets look like 10 years from now then?
For the first time in history, I think there's a few phenomenons going on at the same time. So whilst it's, exciting to think about it through our own lens and what might the technology do in terms of shifting trading behavior and, improving access to assets and, rebuilding how distribution and certainly how derivative trading works. I think we've also got to pay attention to, society shifts. We've got a very large part of certainly the Western economies. Employable people are now, millennials, Gen Zs. We've got a much younger workforce. We've got a population certainly that have experienced the growth of capital markets since the 80s that are beginning to step out and retire. I think there was some really amazing research recently that when you look at the impact of socioeconomic shifts, most traders and brokers are now under 30 or under 35, and they're multi-asset class focused. So they're sitting on a terminal, and where in the past that might have been one instrument that somebody was running, it's now multiple instruments. They are multitasking individuals. They're able to deal with data and multiple inputs and outputs all at the same time. So we've got to think about, is this a driver for, the adoption of tokenization, the adoption of digitization, the adoption of automation? And I would say it is. I think we're seeing a shift in the workforce. Along with that, though, is we're obviously returning to a higher interest rate era. We've had inflation, that has given the world a fairly big wake-up call that we lived in a pretty special bubble, probably for the last 35, 40 years. And so we have to think about, the economic cycle ahead. And I think we are facing a 15 to 20 year journey where there's a new economic cycle, and that will bring pressure. And that means hedging and risk management through the use of derivative is only going to go up. So I think there's a lot of signals that tell us, some of the shifts that we're seeing in small pockets are going to become bigger inflection points. So 10 years out, I do think we're going to be running on a lot of new blockchain-based financial market infrastructure. I think we're going to see a lot of asset classes get tokenized over the next 5 to 7 years. I think the pressure, unfortunately, from a regulatory point of view and a balance sheet point of view is just too great on the existing participants in the market, and it's forcing them to find operational efficiencies. So that in itself is also a driver to remove legacy technologies and legacy workflow. So I think we're going to see a fairly big shift over the next 5 to 10 years.
So will you still be here 10 years from now, or will you be enjoying a well-deserved retirement by then?
Oh, I struggle to switch my mind off, David. So yeah, I always like being on the bleeding edge of new technology. So I anticipate I will still be around looking at the next big thing in industry.
I mean, based on your experience of creating Tokenovate and other businesses, as you discussed earlier, what type of advice would you give to a business trying to seek a foothold in these financial markets that we exist in?
I think the big lessons I've learned in building any business, to be honest, is people first is a really critical part of building your business. The technology and your processes are actually the easier things to get on top of. I think the biggest challenge for any company of any size is actually getting the design of your people strategy right. And what do I mean by that? I think culture, but predominantly attitude. I think most businesses struggle when they have a clash of culture and when people in the business are not invested in the North Star of what that company is all about. And that leads to a clash of attitude. Why do I turn up to work? Am I motivated or not motivated to solve a problem proactively? So whether it's financial services or any other industry, I think more so now than ever, I think getting people to really feel connected to the North Star vision of the business and getting them to feel motivated to go on that journey is the number one task when you're entering into any challenging change strategy like this.
So what's the Tokenovate North Star then?
The North Star is the reinvention of financial market infrastructure. We are designing and implementing a new financial market infrastructure for the tokenized automated ecosystem.
Let's conclude. What question should I have asked you about Tokenovate that I didn't think to ask?
I would say maybe how important are standards in the evolution of derivatives and where do they play? I think also at a time where blockchain technology has been so perhaps fragmented in its evolution to this date, how important do protocols and standards and interoperability play in the 10-year journey? There's a few big standout topics that is facing industry, David, that we could open up on.
Thanks very much, Richard. I think it was awesome and insightful.
Thanks, David.